All right, ladies and gentlemen, I hope you had a wonderful day. Let's just address the elephant in the room right now. I was flat out wrong about Powell, and now the market is on a path to hit new all-time highs. So I hope you're ready for tomorrow and the rest of the week, and I don't even know where to start with this. Not only did every Fed member change their dot plot, if Powell didn't mention real estate and inflation and only talked about it favorably, but he had no bearish or hawkish pushback, even though the market was ripping, and he flat out just did not care about easing financial conditions, and that message has now been made clear to the market. So, Chad, we got a lot to talk about it, thankfully. This is why I was saying, hopefully you see us there live, youtube.com/the stock market. We are live every day, and I told you during the event, because thankfully it only took us about 60 seconds to realize how wrong we were, and the fact was it unleashed a big rally and we were able to turn it around. And a lot of those plays we talked about, we're going to have to be talking about them again, and I got a couple more plays for you. So, Chad, I got a breakdown of today. We're going to talk a little bit broader on where things go, and then we got a big focus on the plays right now because, like I said, after this week, liquidity is going to die down, and this is set the stage. It's looking like you're getting a Christmas gift from Powell, and then we go into next year, and until we get some big data and until we get the next SEP, it is going to be quite the interesting market. And even what Powell said today, there is still quite some interesting implications, even though it was all around bullish. There was no question about it. So, Chad, drop that thumbs up on the video. Make sure you're subscribed. And if you don't know, I already told you, we're live, baby. 30 minutes before up, and you already know. Run it, baby.
Walking to the couch, it's the 2020 election. Live in the hills, but I still get a spread. Started with a live, but I still reinvest it. Feel how I feel, then you feel it's a blessing. I just want the lesson, I just want protection. I'm up and I'm down, but they sound like progression. Farmer never plans if he waits for perfection. Finger to the down, hold it.
But right off the bat, ladies and gentlemen, I don't even know if we have to discuss what happened in the market. The only thing I will throw in here, and this is something you've really got to observe, is the fact that we only went up 1.3 on the SPY and 1.3 on the NASDAQ. The Russell was the absolute killer. We've been talking about that since the beginning of December, and what happened today is really confirming now that cyclical rotation. But what I really want you to see, you have had way bigger Fed days before. Remember the times when the NASDAQ would move 2.5% or would move all over the place after the Fed or even the non-farms? Well, we didn't move that big, but granted, you ran up like 500 points, 600 points in a month leading up to it. So that's one thing I'm going to start with, but let's go back to the elephant in the room, my friends. Well, I guess I was wrong. But like I'm saying, it only took 60 seconds to realize it. I'm going to give you my proof. I got my receipts, baby, but we'll go over how we traded the day. It was actually a great trading day. We got out of the bond plays and that ES short. I took a loss on one, made a gain on the others, but literally 1 minute and 65 seconds is when I went long on the Russell after realizing that they actually lowered the terminal rate, which has never happened this year. Every time we thought it would go down, it ended up going higher. We thought Powell would have pushback. He didn't at all, but that dot plot, it gave you the answers right away. And like we said, we had to be humble about it. I said anything can happen tomorrow. I was throwing out my idea there, but it was all about staying alive, and quickly we knew what was bullish or not. And the fact was, right when they lowered that terminal, that was enough to shoot it up. And the fact that during the press conference, this was the other crazy part you'll have to see on the day, there was no red candles. I think you had maybe 2 red candles right when Powell ended, and then we started to go down, and then everything got wrapped up. But it was a straight shot, and you really don't see that happen all of the time. So why did that happen? It's because the market did not need to reprice anything. That is exactly why we rocketed up. Remember, I was telling you, even on the little recap before the event, we were live on stream and we went over this. The big deal was the Fed futures were pricing in 110 basis points of cuts. We were saying every Fed member would have to change, and they did, which is mind-blowing. But the fact of the matter was the market was very optimistic, or at the very least, that's how people were saying ahead of this release. right when the dot plot came in, it showed 75 basis points of cuts. Why this was so bullish for everybody and they got all excited was because the conservative estimates were still expecting a lower one, but they were only expecting 50 basis points of cuts. That's what we were talking about, where, hey, whatever the dot plot comes in at, the market in the bonds, the Fed futures are pricing in 110. If that's far off, the market's going to have to reprice. But who would have thought the dot plot, Powell, the Fed, they came closer to the most bullish of estimates in what the Fed futures were showing. So this was absolutely wild, but that was the reason why we went up. But to understand it even more in a different sense, the discussion is now shifting into rate cuts. This is that confirmation as long as the data allows it. But really until like middle of January, until March, unless there's a black swan or this soft landing data turns into hard landing data, then you're not really going to have to worry about it too much. And everybody, if you thought they were already focusing on the front run, this was the confirmation. Not only that, Powell was dovish in the presser. He had so many opportunities to really fight back against it, and he didn't. And one thing that I noticed that was really big, he talked about rate cuts. People were asking him how he was thinking about it and what he would do moving forward. He actually answered the question. He hasn't done this in a long time. Anytime people brought it up, if he was really hawkish or it was premature, he would really just say, no, we don't even need to discuss it, and then he would move on to the next question. But this time around, you had so many opportunities for him to fight back against it, for him to even not answer this question about rate cuts, and he did. So this is what got everybody excited now, and now this is what brings into the final implication, because we do have a couple of events and data moving forward, but this has been the green light for a lot of assets, especially if they have been beaten down. We've been talking cyclical rotation all month. We've been bringing up the Russell. There's a reason why the Russell almost went up 4% today and everything was sub 2%. That's because you got a lot of activity now, and people are saying, okay, well, hold on. If the Fed's going to be cutting in 3 months at best, maybe 6 months or 9 months is what they're saying moving forward, well, that means you're going to get lower rates. It's going to accommodate those cyclicals and those beaten down names. If you want to start a long term and you think things are too much, if you're like, okay, maybe I have too much cash, all the people in the money markets, they are going to be looking at those names. Now, obviously, there's a couple more data events even this week. We even have retail sales tomorrow, the Bank of England, and all of that. We're going to talk about that related to the plays, but for the most part, you have to deal with these events. And after that, though, if this idea continues into next year and Powell doesn't fight back and financial conditions ease and there's no problem with it, I would be watching out for that cyclical rotation once again. The only risk that we have right now moving forward is that Powell is talking about rate cuts. All of this soft landing data looks good, but if it turns into hard landing data, employment falls through, and then people get worried, and now the reason why Powell's planning ahead for rate cuts is actually bearish, then you're going to get a really negative response, but you can't fight it because until then, it's going to be bullish. Until then, everybody is getting their confirmation and green light. This is now the catch-22 with all of it. The rate cuts are great. Factoring in them in, it's going to unleash all of the cyclicals. People are going to feel good about it. But if that data starts turning negative and now we're like, oh, that's why Powell's doing it, then we're going to have a problem. The only other thing to mention into it is that, think about it, you got an election year coming up, and this is why now people are saying, well, he has to cut in March, because if he waits till June or September, then it's going to look more politically driven, and then, well, yeah, well, there you go. So we'll see how it all plays out, but unequivocally, man, this thing was a bullish day, and Powell is definitely shifting the tone. People are talking about the pivot. You want to talk about the bonds and this and that and all of it. Now you have the green light. Now it is there until the data turns into hard landing, and if it never does, well, shout out to the long term and everything else. It is going to play out so interesting, and Powell even discussed that. He says he likes this market. He likes what is going on right now with the fact that inflation's coming down, employment's not dropping with it. He's not really tripping about it at all, or employment's not going up with it. So he is liking this as long as things stay good. So we will see how long that lasts or if we run into a problem. But Chattadonia, I hope you're ready for all of it. But now, let us get into the plays. So right off the bat, I got to start with it, man. I know I'm beating it with a stick right now, but you know this, and this play hit, and I'm glad I gave you a timely warning on it. KRE, the ghetto rate hike play part 2. If you don't understand it fully, you could literally go watch the 2 videos before this, the one where I was wrong and the one before that. Thankfully, the play was right. You know what I'm saying? But in general, we were talking about why certain things could be beneficial for the banks, especially if Powell is good. And now what happened today, it is playing out perfectly for what we wanted. And why? Because think about it. Now, if the Fed is saying they're going to cut rates and they're following alongside the bullish bond moves, this is going to add stability to those regional banks at the very least, unless anything gets really, really bad, maybe, again, recessionary data, and then they got to worry about it, but then they'll get even lower rates. But for the fact of the whole held to maturity now, they don't have to worry about their held to maturity portfolios getting blown out. They can make a little bit more money on these higher interest rates. They're already rebounding here. This was very good news for the banks, especially the regional. So that play from yesterday, it's up 100%. And a lot of people are going to ask, do you sell out? What do you do with it? You can make it free, sell a portion, get your initial investment back. What I'm going to do, I'm going to wait a little bit. Like I said, there's a reason why we got March, because if this did flow out with something good, there's a lot of carryover, and that price of $57 on the strike price, that's like the bottom of the range. And now you're going to have the next, 3 months and a half to play it. So I'm going to wait, just like the ARC play, ride it out, and hopefully we could ghetto spread it with a big gain, get a lot of our money back plus a return, and then also have some upside on the back end. So if you don't know what the ghetto spread is, go watch the play or the videos about a week or two ago on ARC, or there's another video on this channel, how we turned $500 into $50,000. We explain the ghetto play on there, the ghetto spread on there. But that is play number 1. Then play number 2, I really like this one. I made a play on this one instantly. You'll see when we go over the trades there. But gold, the thing I'm worried about is that gold has vicious candles on the downside. I got in quick. I think I sold out only after a couple minutes, made $700 on the futures, and then I ended up going with a GLD contract I'll go over after this. But this news of actually talking about cuts, the dot plot actually pricing some in, this is the best thing right now for gold, especially if you think that soft landing turns hard and then we get the hard landing data. This is the green light for gold. People have asked me for a very long time, do you buy gold? Do you buy gold? Is it time to buy gold? Well, I know it's a little bit higher, but I think it makes sense in terms of history. This is how it plays out every time. It's reacting to the policy a little bit. Policy gets favorable. Policy's favorable. It's benefiting off of that. If policy turns sour, gold is going to benefit off of that as well. This news of rate cuts and now more confirmation, it is going to reflect in gold. So I'm going to try to go for a future, but like I said, I flipped out of it, then it ran another $10, $20. I even talked about that happening, but I don't want to chase it because like I'm saying, on a gold GC contract, those candles could get vicious. So what I decided to do, and I did this right at the last minute, I decided to go with an option trade because at the very least, I could guarantee my downside. I said, hey, I made $700 on the future. Maybe I spend $400 here. Give me some upside if things go crazy. And I made sure I got some time, just like the other bank play. And I went for the March 220 calls. This one's way, way out the money. I should have gone 200 and belower, but I just didn't want to spend too much on there. So try to keep it there, benefit off of the hype a little bit. But I grabbed 10 of these at 43 cents. They even went up a little bit there at close. But for all the gold bugs out there, you now have your green light. Again, the only worry is that gold is already high, and people don't like it when it gets the high. Ask the London Exchange, man. But in general, I think this is now the environment you wanted for gold. This is what you waited for. Maybe you got some of the front run, and yeah, I'd rather be late than wrong. I was wrong, all right. But now I do think gold is looking excellent right here. So that is play number 2, and then finally, oh yes, this was a secret one I gained off of today. It's not really a secret. I've talked about it a lot, but I even got one I got clapped on, I'll tell you. But the yen. Yen, I'm going to go for the futures. That's what I'm in. I even still got a YCL. FXY is the best way to play it without the leverage if you do plan to hold it, but they benefited extremely off of today. Not only the bond movement, but the dollar got clapped. And now tomorrow, if you get a dovish Bank of English, a dovish ECB, this is going to lift up the yen more. If the market gets more conviction on rates going down, the dollar's going to drop even more. And then December 19th, that will be the final big event for both the market and the yen. There's a lot of things now pushing pushing in favor, and this has been one of the biggest underperforming currencies on the year. This is a lagger. This is the definition of lagger as of anything globally in terms of currency land right now, and it used to possess an incredible amount of strength. So not only that, but here's one thing I want you to think about. We're going to talk about this a lot probably, but what if Japan on December 19th does what Powell just did? What if they start to signal the rate cuts? You know, we just had that news there, the rate hikes in their case, and they signal it very strong and surprising, and then there you go. So I'd watch for December 19th, watch these other events, but if the rally continues in the U.S. and the dollar drops, you're going to watch the yen get a lot of strength here, and it was already ready to go not too long ago, and I'm sure there's a lot of craziness in the shorts and back and forth, especially after the last week or so. So that is play number 3. As far as everything else, what I am holding, a Russell, a long ZB, the M2Ks from the beginning of the month, but I want you to see what I did here today. Hey, this is Josh AI. As Josh was recording after editing, he realized he was stuck on the watch list screen, and he forgot to show you the actual play chart. So these are all the times that he had there. As you can see, here are the different moments when he's talking about it. So just wanted to give you an update. Maybe I'll just pause it on here. But yeah, this is really awkward now. Back to your regularly scheduled programming. Like the video. Thanks. So if you remember, I had the ES short. I went to close it out. I actually ended up buying 2. So then I had to go close it out on the back end. So that's why I said I closed 2. I accidentally bought 1 instead of closing it out. But remember that play. I was down on it. I was down $1,000. But then those 2 bond plays that I had to the long side, they went up about like $1,800 or $1,700. So I said, hey, if I don't want to hold the risk, my plan was cut the bonds, hold the short, because again, I was feeling hawkish, but I thought it was a better idea. I said, wait a minute, if I did good on the trades yesterday, we didn't walk away with the loss. If I could walk away with like 700 net profit after closing this and de-risking the Powell, I think I'm going to go ahead and do that. So I did that. Then I bought a Russell right before the event, an hour before. I ended up selling it out for like a $5 or $10 profit there. Woohoo! That was just playing the run up there. I didn't plan to hold it in the Powell. And then this was the play that killed me. I got a little bit cocky there, I guess, but I was looking at the Fed futures. I was going over my review with you. This was all like 12 minutes before the event. My goodness. But I was looking at the Fed futures, and I noticed the December probabilities were extremely low. So I said, hey, even if Powell comes in at like 0.5 below on the dot plot, this thing is going to get killed. So I shorted 4 of the Fed futures for December, and then I got blown out. I ended up losing like 4,500 or 4,900, I think, at this point. Got absolutely demolished. I'm still holding the rate cut odds for March. We played that earlier. I only had 1, though, so the sizing is what did not balance it out. But, again, the yen kind of took care of it for me. And I do plan on holding this one for a little bit. Why? Because the floor. The reason why I played it, the risk to reward, even though I went big size, that's why I lost so much, because the size was a lot bigger. This thing can only go up to 100, so I know where the ceiling is, and then depending on what things how they play out, I would only get really clapped if they get an emergency rate cut and then we run into problems. Then this one would be a dire play, but that's why I was like, maybe I grab some bonds along the way, and that's why I got a ZB on the top tick, but I'm still holding that. But now here's the good stuff. All of this was before Powell. So what did I do right away? Right when I realized I was wrong on it, I said, okay, buy the Russell. I waited 2 minutes. I had like $500 on it. So I sold out of it. I said, maybe it'll pull back after some sort of comments and calming down. Nope, that didn't happen. And I was looking for laggers with literally not even 1 minute later, or just about 1 minute 45 seconds later, I said gold is barely moving, and that's the winner when it's all said and done with all of this. So I grabbed the gold, and then it went up 5 minutes later. How many minutes? It was like 10 minutes. Just under that, I sold out for 700. I thought it would top out and come down again, but it didn't. And I was like, okay, I don't want to chase the gold. That's why we went with the options at the end of the day. And then I opened up another Russell. I said, nope, I'm going to top tick this again. And that's the one I'm still holding. It's still up like another $2,000 or something like that. And then I went with the top tick on the bonds because I knew it was bullish after realizing I was wrong. But then again, it wasn't stopping. I was willing to take a top tick because I felt like there would be a big drop during Powell or anything else, and then I could average down and do that. But I said, okay, I'll hold these, save some money to average, and then I never had to average, and then I just kept holding, and that's what I'm probably going to be writing until acted upon by an equal or opposite force. So that's what we did today. The long term loved it. All of the dead plays came back up too. Not some in the green, some not. I did close out of EW, and we got a profit. That was a bad earnings play a couple months ago. I was down like $2,000, walked away with a 400 net profit, so happy with that. But in general, it was great for the long term. This might even help a couple of trades towards the end of the year. We might need it to pad some of the stats there, but all in all, it was a bullish day. We're going to have a couple of days to ride through. Watch out for the latest events. But, Chad, I hope you're ready for all of it. You don't have to FOMO because there's still quality, and that's the next part of the rally. So I hope you're ready. But that is your watch list, ladies and gentlemen. Make sure hydrate healthy, ready to go. Make sure post your watch list. Make sure we see you there in the morning. I need the armor on. I need the helmet shining. And I need you to never forget any sort of spirituality, any spiritual experience always starts with the belief at first. I didn't get to give you no feel. You don't get what I'm saying right now. You're like, how does that apply to Powell? Don't worry, it'll make a lot of sense, but I love you. Drink that water. Stay hydrated, healthy. I will see you in the morning, and make sure you stick to that long term, baby. And horn.